Welcome back to the market update. Now we're almost at the halfway point for the year, so I thought this would be a great opportunity to take a look back at the first 6 months of 2026 and see how equity performance has been doing. Now I should mention we're recording this on Monday, June 29th. I feel that's important because we're not quite at the end of the quarter yet and things move very, very quickly these days, as we know. So let's take a look at performance. And I think what's really important for the first 6 months of this year is not just that stocks are higher, but who's been actually driving the move. And for so long over the last couple of years, it's been all about technology. And even looking more specifically than broad technology, it's been about a handful of companies. We've been calling them the Magnificent Seven. These have been the high flyers that have really been primarily the source of leadership for broad equities over the last couple of years, really contributing to broad market returns and seeing their valuations swell. All of these companies have valuations well over $1 trillion and have been moving higher and higher in recent years because they are the primary beneficiaries and participants in the AI trade, or at least this first phase of the AI trade. So what's been really interesting this year is these companies, the Mag 7, which has grown to become about a third of the overall index in terms of weighting and contribution to the S&P 500. The Mag 7's actually become, I think, what's many are calling the Lag 7. They've been underperforming the market. We've seen this really big rotation in the first 6 months of the year. Now, looking at index returns, the S&P 500 through last Friday, so June 26, but let's just call it for the first 6 months of the year, is up about 8%. That's great. For 6 months, that is a very, very strong return. And I think what's even more impressive is if you look at the second quarter performance so far, with just a few days left in the second quarter, we're looking at the best quarterly performance for the S&P 500 since 2020. So S&P 500 up about 12% over the last 3 months. So very strong performance. And it's been strong despite the fact that the Magnificent Seven as a group, as I mentioned, which accounts for about a third of the index in terms of weighting, has actually lagged. It's down about 5%. So that means we've seen broader leadership. We've seen more companies actually move higher despite the weakness in those handful of larger names, the Mag 7. So that's what's really impressive here. Let's just look at some of the other indexes that we keep an eye on. So from an equal weighted standpoint, meaning if we don't look at the size of the companies and really put all 500 members of the S&P 500 on a level playing field and give them all an equal weighting, the equal weighted S&P 500 is up about 12% so far this year. Now, if we look outside the US, international developed stocks are up close to 9% for the year, so marginally outperforming the S&P 500. And leading the way are emerging market stocks and small cap stocks, up over 20% each so far this year. I think it's been great that we've seen this kind of broadening out. And frankly, I love to see it because for a while there, a lot of us found ourselves defending why diversification still makes sense. And one of the things that we've talked about both in these market updates and in one-on-one conversations with clients is that leadership changes over time. Today's winners could be tomorrow's losers, and you can't time these things perfectly, and it's why you don't want to fall in love with your holdings. You want to always maintain diversification. That's what we've been doing in our portfolios, and so we're certainly happy to see this broadening out in terms of performance. But whether you're invested in the S&P 500 or elsewhere in the markets and have equity exposure beyond just large cap US stocks, I think what's really impressive is across the board, this strong performance has come in the face of geopolitical headwinds. We know that we were faced with the war in Iran, which is still, things are trending in the right direction, but we're still in a very delicate situation there. But the two sides are talking, and progress is certainly a good thing, and it's a good starting point towards a resolution. But because of that, we've seen an acceleration in inflationary pressures, and that's led to talk about whether the Federal Reserve's next move is going to be a rate hike rather than a rate cut, which many of us expected at the beginning of the year. So performance has held up and it's broadened out over the last several months despite these headwinds and the risks to the market. This is going to be really interesting as we turn the page and see how these different stories play out. We'll also be faced with the midterm election here soon, which normally in a midterm election year, we start talking about it well before the beginning of the second quarter. But I think just because of everything else going on, it's kind of been moved to the side. But I think that'll come into focus here as we approach the midterms in the second half of the year. I'll leave it there for right now. I'll look forward to catching up with you next week. But as always, if you have any questions, please feel free to reach out to your financial advisor.